Moon Platoon, what's going on? Meatball is ready to get it going on, and you need to understand whether or not AMC is a good enough buy for this sea of red. We have seen AMC tough it out over a long period of a bear market, closing in on a market crash of 2021. Not only this is the investment for a safer a revitalization of our meme stocks, but also Adam Aaron, the cutest CEO out there, the ape father, him giving out his appreciation. The hilariously funny memes keep coming, and look at that, Twitter for iPad. We can just imagine him going tweeting out his favorite memes of himself. That's very, very nice. And yet what's not nice is the fact that we have the SEC making major moves in playing to some game, right? $3.6 million to a whistleblower that has been brought valuable information to the attention of the FCC, causing it to open a new investigation into wrongdoing. We've heard many different stories about the SEC opening up investigations to hedge funds in particular, right? And this is tied directly to margin calls. And exactly where does that tie in to the absolute highest short cost to borrow ratio fee that we have seen on AMC in a very, very long time. Here, take a look. We have Ortex pulled up right here, and we are looking at 120%. This has been falling since the beginning of today, where it was at 240%. Want to see it for yourself? Go and check out the last live stream from earlier this morning, where we went bell to bell. And if this video isn't quite up to 1,600 likes quite yet, then smash that like and comment out which like you were. That's just for the sake of the Moon Platoon growing all the way up to 81,000 subscribers. Would love to bring you along with it. So where exactly are we in terms of margin calls? If you guys wanted to be able to understand the mechanics of a margin call squeeze or just margin calls in general, go ahead and just search Andrew Mo margin call or mix squeeze, and you'll be able to find more information. But for now, the reason why we're looking at the margin call closely in relationship to AMC and GME story is because of this CNBC talking head dropping casually the idea that margin calls are happening this afternoon.
At you, but what you said, I mean, Weiss just told me to sell the industrials. You're telling me to look towards the industrials, right? He sells Boeing, he sells the XLI. It seems like the whole market has some sort of issue. So, look, I mean, Dow's down 456. So, maybe today, yeah, go ahead.
Today it does, you're correct, and I think a lot of that is the expectation that there'll be margin calls this afternoon and that the selling pressure is going to...
Boom. And this is likely due to a CPI report that we covered earlier this morning that had, let's take a look here, a disproportionately high price increase in the last 12 months in energy, but even in all items averaged out, we are looking at levels higher than the last time of the financial crisis. Back in October 2008, it was only 3.7%. That's lower than what we have right now, April 2021 at 4.2%. So this increasingly unstable precipice that we are balancing between in the financial markets is looking like margin calls and the liquidity test for tomorrow is coming to a perfect connection, right? We have the liquidity test, a simulation to test whether a new regulation is going to cause liquidity issues for the hedge funds and the financial institutions at play. Essentially, it's just a test to find out whether or not margin calls are going to happen, right? Because when you hear liquidity issues, you should think about margin calls. So when that margin calls happen, will we go to the moon? Well, it's going to be a cold, hard ride without our safety spacesuits here. Let's take a look at that article that we mentioned in the beginning of this video. One of the 2021's unexpected trends has involved retail investors popping up, stocks lacking in the fundamentals department. So already starting off with a bit of FUD, starting fear, uncertainty, and doubt. Struggling AMC has been a prime beneficiary as the retail crowd has pushed the share price to unlikely heights. Even after getting slashed since January's peak, the stock's year-to-date performance shows a 375% gain. So can you imagine starting the sentence off with, your performance this year has been really struggling? At the end of the year, you have a 375% gain. As AMC has been stayed afloat during the pandemic, much has been made of the disconnect between reality and the elevated share price. However, with COVID-19 on the back foot, in the West at least, vaccines getting doled out across the globe, and AMC's domestic theaters now open, there is a prospect of a movie theater renaissance. Making consumers comfortable with the result as a result of improving health situation has in other markets prompted a swift return to pre-pandemic trends in moviegoing. They feel a return to $11 billion level or a monthly pace of box office, if supportive of that annual level, will not be immediate, a function of studios' strategic efforts for other business lines, plus viewer comfort and interest in returning to theaters, but can still be supportive of rebounding cash flow generation. So over the past year, AMC has been burning cash in efforts to try to keep the theater lights on. That said, the debt burden has been reduced and the company has freed up desperately needed liquidity. There it comes again. Everybody needs cash on hand via negotiations with landlords, vendors, and creditors. So let's go ahead, speed on down to the very bottom. Accordingly, Ghost stays on the sidelines with a market perform hold rating, right? This is neither buy nor sell without suggesting a price target. Two other analysts join Ghost on the fence, hence AMC has a hold consensus rating based on 3 holds, 2 sells, and a buy. The general view is that the share is overvalued, going by 6.38 average price target, and the stock will shed 37%. So that's just the opinion of some overanalyzed analysts. These analysts want to be able to see AMC come out on top, right? But they are curious about where the pivot is going to be in the coming months, right? AMC has been just trooping it through the market crash of 2021. We can see it here. If you guys come on the technical indicators that we have looked at prior, we saw that AMC faced a double top this morning, an M pattern, and yet continued to this trend through these 2 levels of resistance right above these double digits here, right? It had a low of 10.02, so it never dropped below the double digits, even though it had more, once again, more than, let me make this market clear, 100% cost to borrow. It is expensive to borrow AMC and try and short the stock, and yet people continue buying. That's supply and demand. So if you take the stock into consideration, why not just sell the stock yourself? People want to be able to borrow it in order to hurt the price of the stock, and yet the AMC is still green for the day. So if you guys enjoyed that analysis and you are curious about that margin call prospect, the idea that it is coming, looming higher and higher, then you do want to be able to join us for tomorrow's live stream, as well as more videos on the daily. My name has been Andrew. Thank you for holding on tight. This is the Moon Platoon, the Meatball Space Legends tier, and the Gorillionaire tier. On our way up to 100,000 subscribers. Love to have you with us. And if you guys haven't seen the tools that we used today, we used Ortex, a brand new affiliate. Go ahead and click that link in the description to be able to keep your eye on the cost to borrow yourself, as well as the multitudes of tools for data that is not reported well on almost any other platform. There's a 7-day trial waiting for you, and 2 free stocks on Webull. If you guys use the link, that was what we used to track the average price, and that is entirely free. So 2 free stocks and a free technical analysis tool. I think that's pretty worth it for now, but not for forever. I'll see you guys in the money. Peace.